Good afternoon. This is Tim Grizzle, Real Property Management Executives of Greater Atlanta. My wife, Beth Hunter Grizzle, and I have owned our Real Property Management office for close to 13 years. And we believe in a holistic approach to property management. What I'm here to talk to you about this afternoon are tax benefits. We at Real Property Management believe that 4 pillars of real estate are cash flow, which most people are familiar with that, debt pay down, appreciation of the property, those two are equity concepts, and tax benefits, which most property management companies don't give a lot of focus on that. But it's something we want you to be aware of in your decision to become a landlord and a new business owner possibly. So you're asking, what's this guy doing riding around that's a property manager? Tell me about taxes. Well, let me tell you about my background. I'm a CPA by training. I was licensed as a CPA in the state of Georgia in 1989. I got my real estate license in 1995. I actually ran a CPA firm for 25 years, which is what I was doing before we sold it and formed Real Property Management. So I'm uniquely qualified to talk about both real estate and taxes. Let's start with something most of us are familiar with, our home. Well, what are the tax benefits of owning a home? Well, you got a mortgage, of course the interest is deductible. You pay property taxes and they may be partially deductible. There's a $10,000 limit on taxes that you pay on your personal residence or on your personal return. So if you're paying a lot of income taxes and a lot of property taxes, you're not going to get to deduct all of them. They both cap out at $10,000. Beth and I, our property tax bill was $8,000 last year for our house. Well, we didn't get to deduct much of that after taking into account our state income tax bill. So let's start with your house. You've got property taxes and interest we talked about. Homeowners Association dues. You don't get to deduct those for your personal residence. Insurance, you don't get to deduct that for your personal residence. You pay somebody to cut the grass, you don't get to deduct that for your personal residence. Spring a leak, plumber comes out, you pay him, that's not deductible either. In summary, there's not a whole lot you can deduct that relates to your personal residence. So let's take that house and turn it into a rental property. Suddenly, everything we just talked about that's not deductible becomes a deductible business expense. You got a new tax form in your future called Schedule E, where you report the income from your rent and also the deductions to offset it. So you're going to be able to deduct interest, you're going to be able to deduct property taxes in full, repairs that you make on the home while the property is being rented. The association fees become deductible, the insurance becomes deductible. In addition, the fees that you pay your property manager are deductible. Management fees, leasing fees, renewal fees, those are all deductible expenses. And the one kicker that really is a benefit that most people don't understand is the concept of depreciation. The building portion of the value of your property is deductible over 27.5 years. So that's a nice little benefit. So the moral of the story is we want you to think about this holistically. There's more to it than just cash flow. But also the second part of it is, I'm not giving you tax advice, I'm trying to get you to think about it and have some questions to discuss with your tax person at your next meeting. Everybody's tax situation is different. What may be deductible for one may be limited for another, so by all means, involve your tax professional. The ideal is to start the conversation, to start thinking about rental property as more than just cash flow. We will see you at the next segment. Thank you.